Okay, let us go like this. So the next thing, which we touched on this briefly, risk. So you can risk 1 to gain 3. Always risk less to gain more. That is just a standard I keep for myself, just because you don't really want to be caught in the situation where you're risking your house to gain a pencil. That doesn't make sense. I'm not sure who would do it, but I'm pretty sure you do have people who would do it. Like in these times with the coronavirus, if you're chilling out in public for no reason, that's sort of the risk you're taking. You're risking your life to, for a few social interactions, whatever the case. You're not really taking the precaution on your life where you can, you might be going out to the bar to spend $50, right? But you're taking that risk of making millions later because you might lose your life in this process of spending this $50. It's just have a straightforward risk to reward ratio with all your trades. And this doesn't mean to break it along the route. You might be taking trades and realizing they only go 30 pips in profit, then hits your stop loss. If it's to your plan that you're supposed to keep your stop loss in place and just continue with the process, then that's what you're supposed to do, regardless if it keeps hitting your stop loss. And this is one of the big mental walls that people have along the way, is because if a lot of their trades go a little bit into profit, then hit their stop loss like 5 times in a row, this just makes a person sad. And I'm just trying to show you that you need to keep going, because you're going to have one of those trades where, let's say you're risking 1 to gain 5, right? And if you took 5 losses in a row, that one trade just balanced out the previous 5 losses, okay? So actually, we did cover a few of these in the other thing that we drew. So this is just risk to reward. Risk less to gain more, okay? And you also have the idea where you're going to risk 2% or less, right? 2% or less. And you can always gain at least, let's say, 6% or more. Okay? So in worst case situation, if you're going to lose a trade, you can lose 2% of your trade. This varies a lot depending on how much money you want to throw into your account, yada, yada, yada. But you risk less to gain more. That's a really big idea. I'm never happening. I could. Another thing as well is trading what you're comfortable with. If you're not trading with comfortability, you could be stressing the situation. Oh my God, I'm in 20 pips of drawdown. Should I be in drawdown? Why am I in drawdown? Oh, I didn't put my stop loss in, and it just creates a whole lot of fear. This is why I always recommend trading with a live account, so you can get used to how your emotions react to the market and how you can adapt, okay? So the next